Hey folks, John back with you to talk about descending wedge plays in a little tutorial style video. This is AMD. We got several awesome examples of descending wedges. This is an hourly chart. This goes all the way back to April 2022 to May. So this is the type of setup you're looking for, just an overall downtrend, sustained, right? And if a company is doing well enough that it should recover. These loss of price is exactly what you're looking for a fantastic option setup. Um, Only companies with bad earnings can take a slide and bounce right back. But if the political economic climate is one of like, hey man, we know this stock is going to recover, then the slide is perfect for you to play off of. So if we zoom in a little bit closer here on the hourly chart, zoom in on a closer time frame, you'll see the clear setup of the wedge. And it's never perfect. It's kind of line of best fit. Um, so you can see the general tightening as it tests the top of the wedge, the bottom of the wedge, top of the wedge, bottom of the wedge, falls under but gets pushed back up, back tests the wedge, tests the top, shoots through, gets rejected, comes back through, and this little guy right here is where you might want to think about entering. Then this candle right here gives you your confirmation candle. So a lot of times you'll see price push through a wedge and come back to back test it, push back up, back test it, maybe push up even further, maybe fall through the wedge. So the key again is your stops and your entry points. So we'll zoom in, give you a little bit bigger of a shot here. So once this candle comes through, back tests the wedge, comes back up, and this one takes off, your entry would be the top of this candle right here, right here. Your stop loss is set right here. And your profit taking is the top of this candle right here, which you wicked on this 3 inclusion candle right here. If you had it fall, if you didn't sell here, say you were waiting to hit the top of these wicks, you might have, it's an hour chart, so you probably had time. It's not like a quick wick up or anything. But you also had a fall down and then an even bigger push, and if your stop was here, you wouldn't have hit that. So you would have survived and been able to sell for another day. You could have sold, say you bought 4 contracts, you could have sold 2 at this level, saved another 2 for this level, which you would have hit. And that would have been a great little trade. So we move on. Now we're on May 6th of 2022 to May 13th of 2022. You can see same pattern, just a smaller version, but you get the same same nice result. So we're going to tweak this. I made these charts on the hourly, so they're a little off when you zoom in. So you got a nice drop to the wedge, rise to the wedge, drop to the wedge, and then the push through. This confirmation candle would have cruised right on by this guy here. So you would have had a nice solid entry point with a hard push up. Your first profit taking would have been at the top of these candles right here. Maybe you would have hit it here or not. This point right here would have been a great second spot. Let's see where that goes all the way back to not really a zone. So you might have just been winging it off the end of this guy. But you would have had a great little push. You never know when the push through the wedge is your final play, right? Or the play that you want. It could come up, push aggressively, and drop right back down into the wedge. So that's where setting your stops and not being afraid to bail. So and you give it some time. These descending wedge plays, let's see what day of the week it is. This is Thursday. Maybe you set your sell, or you set your contract, maybe you buy 4 contracts with a Monday or a Wednesday expiration of next week to give it a little bit of time if it doesn't shoot up like this one. I mean, this is the best play you could ever imagine. But giving yourself more time gives you the flexibility. Contracts are a little bit more expensive, but that's what you're paying for risk management, and you're paying to have the right play at the right time. And if you didn't hit it just right, buying that time, not 0 DTE, is crucial. So buying time is never a bad thing. Maybe your profits aren't as big, but your risk management is way better. So you can find these descending wedge. I mean, just on AMD alone, I found several of these plays just by zooming in. Here's another one, for example. The shoot up isn't that big because it's part of like a bigger move, but this guy's decent, 74 to 80. So you're gonna get some profits there. But you have to give yourself, this is Tuesday, July 5th, and this is Friday, July 8th. So you got to give these time to play, give yourself a little room to kind of hang around. You can see this guy came up and kind of came down to almost backtest the wedge, and then it was a slow grind, and then it finally took off. So giving yourself time in these descending wedge plays is clutch. Take a look at the charts; they're easily identifiable. You can you draw your lines in, find your wedges, and when you break from the wedge with a nice confirmation candle, then you're in. And if this guy looks like it's not aggressive and it's not giving you the kind of explosive move out of the wedge that you're looking for, then don't play it. No one says you have to make a trade. Sometimes no trade is your best trade. All right, everybody. Hope you learned a little something about descending wedge breakout plays, and talk to you later. Don't forget, smash the like, subscribe, turn on notifications. Booyah!